Good afternoon. Welcome, everyone. Thank you so much for joining our sections. So Stony Brook University College of Business and our Center of Entrepreneurial Finance have collaborated with Stony Brook Small Business Development Center to present this section called Beyond Venture Capital, Crowdfunding and Accelerators. I'm Richard Chen. I'm the Director of Center of Entrepreneurial Finance. Our center aims to advance and disseminate research examining how entrepreneurs acquire, manage, and transfer financial resources. We aim to create an ecosystem that will encourage faculties, students, and entrepreneurs to work together solving real-world problems. We also have blockchain business that specialize on blockchain projects. And many of our faculty are actively working and doing research in this space. And we also have trading and investment lab that focus on trading and investment project. If you are interested to learn more, feel free to check out our website. And I would like to take this opportunity to introduce our speakers. They are experts in their own areas. And we have Michael Chen, who is our technology entrepreneurs in resident at Stony Brook SBDC. He has launched several successful products and apps, which have acquired millions of users and are frequently ranked as the top of the 50 most popular apps on iOS. Michael has successfully experience raising money through Kickstarters as well as through the Spring Mobile Health Accelerator powered by Techstars. He has helped advise many startups on product growth and fundraising. Thank you so much, Mike, for joining us. And next we have Patrick Hurd, who is an entrepreneur and have worked with hospital leaders to bring innovations into their system. He's a senior associate at MedStar Ventures, focusing on finding and funding the future for medicine. He have helped MedStar develop innovation communities, running events, creating conference, and managing the help run innovation co-op challenges. And welcome, Patrick. And thanks so much for joining us. And finally, we have Gwen Cheney, who is the principal partner at India Bios, advising and investing company at all stages of growth. Gwen was a venture partner at Fusion Fund, an early stage fund in Palo Alto, focusing on AI, robotic, and medical device, and a director at Studio X, a machine learning venture studio based in Austin. She spent 3 years in Singularity University Ventures and an impact-focused accelerator and helped launch their first batch of startup in the Nordic campus. Prior to Ventures, she spent 18 years on Wall Street investing in public equities. And she is a chartered financial analyst, charter holders, and currently sits on the advisory board of Yale School of Medicine. Thank you so much for taking all your time to join us. I know this is especially in this pandemic. I wish we could invite you on campus in the future, and really appreciate taking your time to share your experience with us. So for today's agenda will be the following. Michael will spend 10 minutes discussing reward crowdfunding platform and share some of the success stories. And at the same time, he will also talk about the advantage and disadvantages. And Patrick will go over equity-based crowdfunding, which is a very different form of crowdfunding platform, but at the same time also enable entrepreneurs to raise fundings. And then Gwen will share her insight on accelerators, how accelerator will enable entrepreneurs to develop and grow their ventures. And we will conclude around 4 with the panel discussion and Q&A from the audience. So let's get started. Michael, please, would you like to take over?
Absolutely. Thanks, Richard, for the great introduction, and super excited to be sharing this afternoon with everyone here today. Well, I'm really excited to be talking about this because, crowdfunding was actually how I got my first startup off the ground. So I'll be sharing a little bit about that, kind of some tips and tricks we use to do a successful Kickstarter campaign, and even talk a little bit about Accelerator, because I also went through one called Techstars. So let me share my screen because I actually made a quick presentation. So 1 second. Can everybody see my screen?
Yes.
Awesome. All right, so crowdfunding. Hey everyone, Michael Chiang. I'm the entrepreneur in residence at Stony Brook's SBDC. EIR, ultimately that just means I'm an advocate for entrepreneurs, for other entrepreneurs. I'm here to kind of lend my experience to other startups, other founders to hopefully get their products off the ground or get them to launch and get them into the business world. A little bit about myself. I founded a few startups like Rich mentioned, one of which my journey started with matchpuppy.com. It was a website I've launched in 2012. My goal there was to basically create a meetup.com for dog owners. Quickly pivoted that idea into something called FitBark, which we built Fitbit for dogs. And that was actually the Kickstarter campaign project I was just telling you guys about. So I'll be talking more about that in a moment. And then most recently, I actually worked on something called Joyride Trivia, which was a trivia game you play doing Uber rides. It was an app built on top of the Uber API. And we're actually in the mode of exiting that with another company. So this quick high level, crowdfunding, there's actually various different types of crowdfunding. Like Rich mentioned, I'll be talking about reward-based crowdfunding, which is, Kickstarter, Indiegogo types. But now there's equity-based crowdfunding on sites like Republic, which is super, super exciting. We're living in super exciting times. And lastly, there's also debt-based crowdfunding, which is not a lot talk about. But yeah, there's a ton of platforms in today's world. Kickstarter, Indiegogo, these are probably the household names, but you still have your GoFundMes, which is a lot for family, for friends, for communities, and Republic, which is the I think one of the top equity crowdfunding websites. So FitBark, we built a project because funny story. Back in 2012, 2013, activity monitors were kind of on the rise. This was the world of Nike FuelBand and early Fitbits. So I actually had a competition with a friend of mine from MIT about who can rack up the most Fitbit points. And unbeknownst to me, during 1 week, his numbers just skyrocketed. I thought he was running marathons every day, but instead he actually just put his Fitbit on his pup and had him run around Central Park. So that's kind of how our idea got born. Our whole thesis was that, our dogs can't really communicate with us. They're super excited to see us all the time, but we don't know if they're actually sick or they're slowing down, and they can't tell us that. So we wanted to leverage technology to almost act as our dog's voice so that we can look at data to make sure we're doing the best we can as dog parents and making sure that, our pups are feeling well. So FitBark, we're building Fitbit for dogs, and it's a little, like you see on the page right now, a little activity monitor you strap around their dog collar. We launched it with a Kickstarter campaign, but not a lot of people know we actually launched 2 campaigns. So the first campaign, we quickly launched it and we took it down within, I think, about a week because it was just not going as well as we hoped it would be. It was kind of the cliche story of, if you build it, they will come. If you launch on Kickstarter, we thought there's going to be a floodgate of people wanting to back this because it was like a dog project. People love dogs. This is Kickstarter. But no, there's definitely tips and tricks, and you have to have a strategy for launching a crowdfunding campaign, whether on Kickstarter, Indiegogo, or self-hosted. But yeah, the second time we ran our campaign, we learned everything we needed to, well, at that point, we learned a ton about running a successful Kickstarter campaign that I'm going to go into what we did different the second time around. I'll be going a little bit more in depth in a moment or two, but yeah, the second time around we raised $80,000. We actually raised the initial amount that we needed, which was I think 30,000 within the first day, and ultimately raised $80,000. At that time, we were the highest pet project raised on Kickstarter. Shortly after that, not really that short, but about a year or two later, we actually got in through Techstars, and specifically it was called the Sprint Mobile Health Accelerator powered by Techstars. Ultimately, basically was Techstars, one of the top accelerators. They partnered up with Sprint, and the theme for that accelerator was mobile health, and we were all about mobile health for dogs. So we moved out of Kansas City. We went through this program. It's almost like a 3-month MBA for your startup. And they connected us with product designers, other product people, investors, potential partners, everybody we needed, they put in our way to get us to the next level. So I highly recommend Techstars, highly recommend Accelerators, and happy to talk about it more for anybody who has questions. And that's us. Shortly after the demo day, but again, not that short after, it's about another year, and we got into, I think this is Target. This is the first time we got into a big box retailer. As you can tell, this is my co-founder, Sarah. We were super pumped to see our product from an idea stage, from a Kickstarter campaign to Target, to going into the shelf of an extra store. So it's super, super exciting. I know I don't have a lot of time, so I wanted to quickly, high level, talk about a few key things we did differently about a second time around that we were able to raise our goal within one day. So Kickstarter and Indiegogo, any of these crowdfunding sites, you have to have a strategy in place, right? You have to have months of work in preparation for the actual launch. So what I mean by that is, your goal for the campaign has to be super clear, both internally and externally. Backers want to back projects that they know are going to happen, as well as anybody who, you're going to need buy-in from, either support or backing you, right? So they want to know that you guys know exactly how much money you need and what that money is going to be used for. Ideally, the money should be for, funding the product, getting into production, and stuff like that, right? So that's super, super important. And the second thing is, a great video. This is kind of in 2021, kind of like a, everybody understands this, but a great video will go to great lengths for a successful crowdfunding campaign. So I always recommend to do that months ahead before launch, and not just the video you're going to use for the main page, the campaign, but also create content you're going to use for Facebook ads, for Instagram ads, for any kind of ads or just outreach. Create as much content as you can, because you won't have time to do that once you actually launch the campaign. And a few other things too is rewards. This is reward-based crowdfunding. And again, reward means that ultimately these early backers are getting a reward for backing you early, right? What's in it for them? They're in it because the price they're going to get the product for is either going to be a steep discount, or you're going to be adding rewards for these, different pledges, right? So make the rewards clear and also make them exciting, because again, you have to think about it like if you're in the backer's shoes. I'm scrolling through my Kickstarter app and I stumble upon your campaign. Your rewards have to really be speaking to me. I need to see that, wow, if I back these guys, I'm going to get in early. I'm going to get some crazy, awesome rewards. It has to really tingle, get me emotional, get me excited, right? You got to get supporters. Build a group of supporters for day one and specifically hour 0. For Kickstarter and for Indiegogo, you got to get it. You got to get everybody who wants to back you and support you. You got to get them to promise you they're going to back you within that first hour you launch the campaign. And the reason for that is because, again, people want to be part of successful projects. So if somebody wants to help you, the most help they can give you is on that first day, and specifically that first hour, because if you get your goal funded within that first hour, Kickstarter's own algorithms pick it up, reporters pick it up, PR pick it up, This is a campaign that's already funded, and they went through the moon, right? You basically hit your goal within the first day, first hour. It just shows that this is something the market wants. So more and more people will pick up on this. Kickstarter will promote this, and so forth and so on. And that's something, I think the main thing we did differently the second time around was we built this incredible list of emails and backers, our friends, our family, whoever ever wanted to help us. We told them, help us in the first hour or don't help us at all. Okay, so that's super, super important. And last few things, I know my time is running out, but something that a lot of people don't get preparation for is that upon launch, once your campaign is live, it's a full-time job. You have to be actively posting updates, communicating with your backers. There's going to be questions. It's a full-time job for that duration once the campaign is live. So do as much work as you can so that once the campaign is live, everything is almost on like a machine and just running, right? Whether it's ads on Facebook or posts you're going to post on social media, get everything ready. And just to show you guys, this is some of the rewards we had. We definitely had a great, discount for getting in early. And this is something we got a lot of feedback on. And we also made it fun, right? We had stretch goals that were a little bit high, but again, there's definitely a user base on Kickstarter and Indiegogo that can afford these kind of stretch goals, whether it's like a $5,000, photo shoot with a famous dog photographer or whatnot. But yeah, definitely add in the stretch goals because it can definitely help you hit your goals faster. So yeah, that's reward-based crowdfunding. Hopefully I didn't take up too much time, and this is my email if you guys wanted to reach out to me.
Great, thanks so much, Michael. And at the end, we'll have a chance for everybody to come in and have a full discussion on the pro and con of these different platforms. And next we have Patrick Hurd. Patrick, please go ahead.
Hey everyone, 1 second. Sorry, I don't have my presentation. I don't have a presentation today, so I'll just kind of talk to you guys about this. So just like Michael said, equity crowdfunding is like a great way if you don't have a large network of investors that or angel investors to kind of get your start funded, because usually a VC or angel investors, they only invest in companies that they have a warm lead to, or like they know another person who's involved with the company, something like that. So in 2012, Obama put into law something called the Jobs Act, which allowed companies to publicly sell securities into their securities for their company. And this was basically only available, though, to accredited investors. An accredited investor has to be someone who makes at least over $200,000 a year, or the household combined income is $300,000 or $1 million in liquid assets. So a lot of the first equity crowdfunding sites, such as like Angels List or even like the company I work for, MedStarter, it's you have to be an accredited investor to go through it. But then in 2016, Title III was passed for the Jobs Act, which basically allowed companies to raise money from anybody. And this is when you see companies like Republic or WeFunder come into place. Basically, when you, so the main benefit for going through a company website that's an accredited investor website is that you're going to be able to raise at a lot higher chunks of money. Instead of raising, $50, $100, you're going to be saying the minimum offer to get into this company is going to be $5,000, $10,000. And you're going to be reaching out to angel investors. And when you get these angel investors, they're usually very sector focused. So if you're in the healthcare field like I am, they're going to be looking at healthcare companies. And if they invest in you, they might be investors in a fund, in a VC fund. So they're going to bring you to the fund that they're part of, or they're going to bring you people. And it's kind of like the saying, if you want to go fast, go alone. If you want to go far, bring a team. So, you're going to get this team behind you and you're going to be able to meet these networks. But then on the downside is like, you're going to have a smaller pool because not a lot of people get their accredited investor list. And that's where you can go for an OPO, which is an open public option. and that's like the Republic, and you still have like a minimum. It's usually higher than you would do on other like reward-based funding. It's going to be like 500, 250 is usually the minimum for those ones. It's a couple of thousand to a few hundred, and basically allows your company through something called a safe note or a crowd safe, which is a a simple agreement for future equity agreement. And this allows people to, this allows you not to put a valuation on your company, because usually when you do an equity crowdfunding site, you're very early stage, or either pre-seed or seed. So you don't want to put a valuation on your company, and a safe will basically allow you to raise this money for hundreds of people, and you just say, okay, give us this amount of money, this much shares at a $20 million cap. But then if you want to make sure when you do this, you're not giving away too much of your company, because even though you're not rewarding prizes, you're giving your company away. And once you give that away, you're not going to be able to get it back. So a lot of times investors might get ambitious and be like, you know what, let's raise $500,000, a $2 million valuation. You're giving away like 20% of your company real fast, and you won't be able to use that for future rounds. So you got to be careful with that factor to it. There's also a limit to how much you could raise on equity-based platforms. Right now, the top you can do is a little bit over $1 million in funding is allowed to be done. So yeah, it's going to be raised to 5 million soon, but you can try to go out there and try to raise a Series B with like $5 million. What else? Oh, and also if you want to be able to raise money on this, you're going to have to have your company has to fill out something called a Form C, which basically allows you to sell securities. And it's not as easy as getting onto reward-based platforms, because the people who run these websites are going to go through your entire business plan as if they're investors, because they want to make sure that when they're putting up the campaign that you're a real company and that you're not going to run off with the money, because you're not offering any prizes. So these people they're putting their reputation onto your company when they raise this money. I think that's all. If anybody has any questions, I can answer that.
Great, thanks so much, Patrick. Perfect timing. And then next we have Gwen Chen. Hi, how are you?
Let me share my screen as well.
Great, thank you.
Do you see my screen with the slides? How do I present? I think I can just scroll down from here. So I'm a partner at IndieBio New York, just down the street from you guys. But don't tune out when you hear the word bio. I'll give you two examples of founders that came through us very successfully without a PhD. So one of our one of our founders from last year, actually, he has a material sciences background. So he came up with this idea of a compound that actually decreases time to thrombin. So now he's going down the therapeutics route. So no PhD, just material sciences background, and is doing great. Another example is somebody from Stevens Institute. So in New Jersey, Michael Selden, he started Finless Foods. So only an undergrad degree, but he had the knowledge of how to do cultured meats. So now he's growing bluefin tuna from a petri dish, and he just closed $10 million for his Series A. So do not tune out yet. I'll give you a great reason to pay attention, which is we give you a lot of money. Getting into IndieBio means that we actually give you $525,000. So that's more than $500,000. And if you qualify for the therapeutics route, it's $2.25 million. So it's a huge chunk of money by the end of demo day. So that's why hopefully I woke everyone up up. I know it's Friday. So we're actually the world's biggest biotech accelerator now. We have invested in 159 companies. Some of them you might have heard of or seen in stores. So the NotCo just relocated from Chile. So they've grown so large in Chile that they have landed in the US. So you'll probably see them in grocery stores soon. We invested in Memphis Meats, just like Impossible Burger, and they're also growing cultured meat, cultured burger. We invest in Clara Foods. They're trying to do dairy proteins without the cow. We also invest in Geltor. Geltor is a synthetic biology company that is making gelatin without animals. So Geltor just raised $97 million last year in the middle of the pandemic at almost $400 of valuation. So super interesting companies that you've heard of, you might have heard of. So what is IndieBio? So IndieBio is actually a pretty big family of accelerators, and it's owned by SOSV. So we're sort of all over the world. So there's a huge advantage to that, right? Is that we have a hardware accelerator called HAX. So, Opentrons is actually a HAX company. So we've had a couple of companies that are trying to do cell engineering, and they don't want to build their own robots. They're just working with Opentrons, right? And the CTO, the founder of Opentrons, is helping them adapt their robots for the startup's needs. We have another company in the current batch that also has a hardware component and one call into HAX, and we have a company at HAX that's making their prototype for them. So there's a huge advantage for having that network. Mox is our mobile accelerator. So Mox is super hot in Singapore and Southeast Asia and India right now. And as a result of Mox, SOSV is actually the 9th most active investor in India currently. We also have the China Accelerator. So IndieBio New York, this is the 6 of us. The reason why I'm showing you everyone here is that, as you're considering, I know Michael talked about, the importance of accelerators. They're actually quite different one from another. We are very hands-on, right? So there are 6 of us full-time staff. We only take in 10 companies. So it's a lot of one-on-one time, right? And so of the companies I'm responsible for, I schedule one-on-ones every other day, right? So at least for 30 minutes, I'm sitting down with you and wondering, what are you stuck on? What can I be helpful with? And the whole idea is I don't want any founder that I'm working with to be stuck spinning their wheels for more than 48 hours. Whatever you're stuck on, I will help you solve it so that you keep moving forward. So that's something that you really don't get from any other accelerator. So what we've been really good at is turning scientists into entrepreneurs, right? And so whether you're a PhD scientist or you just have an undergrad with a great idea, we're going to help you turn that into a huge business. So the program, this is a little bit out of date. It's no longer $250, it's $275 for the first check, and then another $250, which is what brings you to $525, a little over $500,000. So we do 2 batches a year, a spring batch and a fall batch. And so the fall batch applications are open. It also used to be a 4-month program. Now it's a 6-month program because of the pandemic. We just want to make sure that we work. So you're getting more for your money. Or I guess we're giving more for our money. We want to make sure that startups have the extra 2 months because of all the supply chain issues that we've seen. Everything is just taking a week or 2 weeks or a month longer. And we want to make sure that all the companies have their milestones achieved by demo day. I think the other thing, I literally just pitched to a practicing medical doctor, right? And she's thinking about a company. And, I told her about just our network. It's not even, so I was talking to a world bacteriophage expert, right? And I thought I was so special that I knew the world's expert in phages. And so I brought him into our meeting, and literally my colleague, Steve Chambers, also in IndieBio New York, said, "Oh no, I know Michael. Michael's my friend," right? So not only are we connected, we're probably 2 degrees connected, but, through multiple touch points. And that has tremendous value, is that, as a startup, as you grow, you're going to need more and more resources, both in terms of money, but also in terms of contacts and intros, right? And so we have a biomaterials company in the batch right now, and we just put them in touch with, we had a meeting with Tory Burch, we had a meeting with Reebok, we had a meeting with Nike, and these are all through connections through warm intros through IndieBio. We didn't have to send any samples in, they just took the meeting. And same thing with all other, CPG industries or ag. We're pretty much well connected, and in any industry that you are thinking about. So, I mean, the three things that we really focus on is if you have an idea, if you have the science, we're going to help you build a business around it. And part of that is the product, its revenue, and its fundraising. So we do have pretty strong collaborations with a lot of the ecosystem within New York. We actually have a free conference coming up on May 11th that I'll talk about later on in this deck. But the advantage of having these connections all over New York is if you need lab space, if you need equipment, if you need an expert in any area of these at these research institutions, we'll make the warm intro for you so that your emails don't get lost. So we're already on our second batch in IndieBio, New York. So IndieBio San Francisco has been around for 6 years now. They're now on batch 11. IndieBio New York, we just started last year. So last year was class 1. So we've had some super interesting companies. So this is the thrombin company, Cayuga Biosciences. That's the one that with a material sciences founder turned therapeutic founder. This is our current batch. We have a number of super interesting companies. Brickbuild is doing oral microbiome. Sindo has identified an enzyme that can break down the carbon-carbon interaction between in PVC. So PVC is one of the longest living plastics that just don't degrade, that just doesn't degrade, and Sindo found a way to degrade it. We have another company called Beimmunity. They found an organic compound that it fully biodegrades within a month. That will sequester pesticides from inside of bees. So they're putting these in pollen patties to feed it to bees such that bees actually live longer. They ran a control trial of 50 bees treated, 50 bees without. They double dosed the bees with twice the level that certified by environmental agencies. And of the ones untreated, all the bees died within 3 days. And the bees that were treated, 80% of them lived for the full 5 days of the trial. So super interesting, very interesting companies. So the guy on the right is the material science scientist that I mentioned that turned into a therapeutics founder. The one on the left is also another PhD founder. He actually made software. So I think the other thing to think about, to consider is that we're not just bio, we are also software and big data. So the guy on the left, he started BioMage, which is just pure software for single cell sequence analysis, right? So single cell sequencing is a huge new area that, Illumina isn't even, up to speed on, right? And what do you do with all this data? So he's figured out a way to analyze the data. So, don't think of us as just lab work. The BioMage founder, he spends his whole time in front of his computer. So I think the other thing, in addition to the money, is we give you free lab space. And most people don't think that highly of lab space. It's super expensive. For just one bench, it's $4,000 in Boston, on the outskirts of Boston, and in New York is about $5,000 for one full-time person and one part-time person, right? So it's a super expensive thing, and we give you free lab space for the 6 months. But honestly, we've never kicked anyone out. So we have a lot of squatters that have used the lab space for probably a year or so, and that's a huge cost savings, about $50,000-$60,000. So we have an entire floor of Rockefeller University right now. So it's great location. It's at 60th in York. We have 10,000 square feet. No, nobody has to ever share any bench space. I think the other, to Michael's point about the importance of an accelerator program, accelerator programs are definitely different, right? Some of them will only give you $50,000 for, no equity or a sliver of equity. And then there's us that we give you a ton of help, a ton of capital, right? But I think the other thing to ask is, what's the success rate of your accelerators? So this 80% is actually underestimated. I was just corrected on a pitch that it's actually closer to like 94% now. Is that 90, like our write-off, only 8% of our companies have failed. So over 90% are still thriving, right? And so that is, that's a metric that no other accelerator can match. So that's my email. It's super easy, gwen.cheney@SOSV. And And this is the event on May 11th that I was talking about. If you Google Unexpected Biotech, you'll see that we're hosting an virtual event, and it's free. We'll have a couple of our portfolio companies that we'll be interviewing, a couple of VCs in the New York ecosystem, because we definitely also want to grow the New York ecosystem as well. So feel free to register there. And I think I'm done. Happy to take any questions. Let me stop sharing.
Thanks so much, Gwen. So now let's open the floor for any question. If you would like to get connected, this would be a wonderful opportunity for you.
Yeah, hey, my question is mostly for Gwen. Is there a common career path that people take to get into working for an accelerator, and also like what skill sets do you recommend developing?
I think just being old. I'm in my 40s. So like I've invested since I was 11. And so there's definitely a track record. So I think the other thing, so I spent 18 years on Wall Street, professional investing in addition to personal investing. And then I helped launch an accelerator at Singularity University. I launched their Nordic campus in 2019. I launched another accelerator in Austin for Shell and BCG, focused on machine learning. And so it's just experience. Being old. Once you're old, you'll get there.
I actually got something to add to that. Hey, Francis, I don't know if you're just interested in accelerators, but if you're interested in like venture investing, equity crowdfunding campaigns, anybody can put $100 in what you believe in. So you don't need, crazy checks to back a startup. You can start creating your portfolio now, whether it's on Republic, backing startups you believe in, getting like a thesis, putting it on a blog. You can start doing your work now. You don't need to wait till later to join a company to invest.
To comment on that, that's actually how I got my job at a VC. Was I showed them my investments and what I was doing to make these investments and my thesis, and that led me to my first internship at a VC.
I see. Thanks.
That's a great question. So I also have a follow-up question. So for the three of you, what do you think would be the future of each of these platforms? Because if we look at entrepreneur finance landscape, things certainly have moved rather quickly. And 10 years ago, 20 years ago, we don't have crowdfunding platform, and Accelerator was at the really at the beginning stage. So from your perspective, what do you see as the future trend for your for the platform you are familiar with?
I mean, I guess I can answer first. Definitely, I think we're gonna start seeing later stages start going for equity crowdfunding. I think that, as the cap of how much you could raise goes up to 5 million, we're gonna start seeing Series A's and Series B's start raising on these websites. Also, people are becoming a lot more comfortable investing in private equity and stuff like that. It used to be like, Republic or WeFunder used to do maybe 100,000 a month. Now they do millions of dollars they're raising for these equity companies.
Yeah, totally. And then just to back on what Patrick just said, I actually have a lot of fellow founders in the industry, whether it's, startups raising their seed round or even Series A. We're seeing even, those, they're going on Republic, sites like those, instead of going your traditional routes like a C stage VC firm or some, angel networks. It's a much popular option today than ever before. So I think that's only going to increase, and that's only going to be in the favor for entrepreneurs because we have more options for funding, right? The other thing I wanted to mention, because we're kind of on this, your question, Rich, was kind of on the question of trends. The other day I actually read up on an author wrote a fundraise for her book by using an NFT, a non-fungible token. Right. For those who aren't familiar, NFTs are basically, they're one of a kind, right? They can't be, I can't trade you my NFT for your NFT. So my purpose in bringing this up is that I think finance is constantly evolving now more than ever. So don't get used to the landscape right now, because I think it's going to be drastically changing within the next year, if not the next few years. So
I'll echo what both Patrick and Michael said. Now is a great time to be an entrepreneur. If you have an idea, I would definitely pursue it. There's a ton of capital out there. There's a ton of help. You know, I mean, even the accelerator programs are specializing, right? And so you get very focused help, detailed connections that would help your companies grow. I've never seen a time better than now to start a company.
Right.
I have a question for you. What position do you take in your companies that you take into your accelerator? That is, what proportion of ownership?
Yeah, so we do. I mean, we definitely take a small share of common equity, but most of it is a safe note, right? Is that, you know, when the company's that early, so this is no different than YC, which is a safe note. When the company's that early, it's hard to put a valuation on it, especially when you have no revenue. So it's just a safe note to get the documentation done.
Well, what's a safe note?
I think Patrick might have mentioned, or somebody alluded to this earlier. So it's for future equity. It's basically a loan for future equity.
Okay, got it.
And Anne-Marie have a
Can you
question?
describe that? Yeah, thank you. Gwen, could you describe that in somewhat more detail in terms of the advantages and disadvantages for the investors and the advantages and disadvantages for the entrepreneurs? How does it work?
What you mean, for a safe note or an accelerator?
For a safe note.
Yeah. So I mean, I you know, the only disadvantage I see is that you're not putting a valuation on your company immediately, right? But the thing is, rather than spending 6 months negotiating the valuation of your company and hiring a lot of lawyers and, you know, whomever other experts you need to value your company, you know, it's I mean, would you rather do that, right? Because that's, you know, lawyers and accountants and whatnot are not cheap. That's easily 50 grand to establish a valuation.
Right.
So that's great for the entrepreneur, but what's the protection for the investor?
Well, so it is a safe note such that once you do have your next round, it converts into equity.
Also, sorry to add on to that, safe note for the investor, usually they get a discount when they use a safe note. So it's between 15 to 20% of the valuation or the valuation cap.
And you may be more used to like convertible notes, right? That's something that's pretty common in the industry for years. So SAFE was actually created by Y Combinator, a top accelerator in the US. SAFE stands for a simple agreement for future equity. So in terms of saving lawyer costs, I definitely agree with Gwen. It's something pretty tangible, even for the investors, because convertible notes, every law firm has their own version. So even for the investor, you're gonna have to be spending money back and forth and getting the convertible note negotiated, whatnot. The SAFE, it's pretty uniform. It's like a 2-page, 1-pager that we send out. So a lot of times it actually saves time and money on both the investor and the entrepreneur.
Thank you. Thank you, Michael.
How long have they been around?
YC made the SAFE a couple of years now. It's Gwen and Patrick, correct me wrong, but it's been out for a couple of years, if not 5.
Yeah, it's not new. It's been used by a lot of, most seed stage companies will know what a safe note is. And to be honest, a lot of seed stage investors prefer it because it's what they're used to. If you say I'm using a YC safe note, people understand what you're using.
You go right to the Y Combinator and see the download the safe note right there and kind of.
Yeah, it's free. It's on the web.
Got it.
I have a question. So nowadays, I think some of the startups, if they are doing blockchain related projects, or if they can issue token, they can just issue token to crowdfund to some extent, right? And also the tokens can be thought as more like a security token or utility token, and it's tradable right away. So do you feel like that was a threat to the equity crowdfunding business? Because if I have to start do my startup, I feel like issuing token give investor liquidity. As an investor or as the startup entrepreneur, I feel like both are better off. What do you think? Okay, maybe I can ask maybe Michael or Patrick.
Yeah, I think Dan Ling. Sorry if I'm pronouncing it correctly. I think you're completely right. I mean, I kind of alluded to that before. I was really amazed by this author. I forgot her name, but she completely fundraised the funds she needed for her book through an NFT, right? So this is like being developed as we speak. I think there's going to be more and more innovations in this. I don't think they're competing with each other, but I think an entrepreneur in today's world needs to be smart as always, right? You need to consider the resources you have and then what you need to get your startup to the next level, because the main thing is to build your business and get to that goal, right? So if it is already an existing platform, you can leverage like Republic, who has a ton of investors on it, and you know you need your money within 3 months so you can get to that next level. You got to do that, right? So you have to be smart and consider, you know, what resources you have and what you can do with what you have. But I definitely agree. There's a ton of innovation. Like Gwen said, there's no better exciting time to be an entrepreneur in today's world because of the massive amounts of resources available for the entrepreneur.
Right.
Also on that, I know one company that has that they raised using like cryptocurrency that they made, and just for investors out there, you know, when they first launched it, it was like worth, let's say, tenths of a cent, and then like after a few weeks, like the valuation for the coin dropped to like less than 100 of a cent. So it's not like, you have to be careful even with the cryptocurrency involved, stuff like that.
Yeah, but for private equity, you would not know how much it's worth until 7 years later, right? I'm not trying to say it's obsolete. What I'm trying to say is now there's a competing platform to attract talents or entrepreneurs, and having the liquidity, having your stake instantly tradable is really appealing from perspective of investors as well as entrepreneurs. Yeah, but thank you all you guys said are wonderful, very helpful.
Completely agreed. And then the other thing I wanted to add too is something Gwen alluded to, right? Investors, not necessarily just for capital, a lot of them are value add, right? For us going through Techstars, they open doors that we wouldn't be able to get to, at least within that time frame that we had. Would have taken much longer. You know, they got us into so many stores and connected with us with so many investors that, you know, it was amazing. It was transforming. So I would say, you know, there's definitely so many innovations, and that's, again, you know, for the entrepreneur, it's a plus. But I also agree that, you know, you still have your investors who are value add, who are able to add. You want to call up, you know, when something happens, right? I definitely have my investors that I text, that I know I can reach. When we need help, we can reach out to, and that's invaluable for any entrepreneur building a business.
Yeah, totally agree. Especially nowadays, there are these different platforms actually offer different type of advantages. For example, reward-based crowdfunding platform allow you to test your product ideas. You do not need to sacrifice equities, similar with cryptocurrencies, while equity crowdfunding platform and accelerator often will offer connections, building the networks. The networking effect will kick in. So there are a lot advantage, just different type of advantage across these different platforms. I do have one follow-up question for everyone, for our speakers. That is, do you see for these different distinct platforms, do you see what type of characteristic they look for when they invest or when they provide assistance to entrepreneurs? Because one of my research have shown that comparing to reward crowdfunding platform, investor or backers on those platforms tend to prefer to invest in incremental innovative project. This is quite different compared to venture capitalists or angel investor who only prefer to invest in radical innovations. Do you see any different venture characteristic or entrepreneurial characteristics they are preferred across these different platforms?
I think it might be hard to compare the three of us because we're so specialized, right? But I think good founders are just good founders, right? It's, like, I mean, the prime example, I'm not saying I like Elon, but he's used as the prime example as the founder, right? Is that, he started a payments company and then an autonomous driving company and now a space company. There's nothing in common, but good founders are good founders.
I think if I wanted to add in something real quick is this underlying thing of people wanting to be involved with projects that are happening, that they know, they see, there's a clear roadmap, there's work done that they feel comfortable putting their money or even their name behind something, right? So just the fact that, people want to be part of stuff that is happening, that is going to be a success story. So I think that's one underlying theme in addition to just good founders.
Yeah, I agree. I think that definitely, especially when it comes to equity crowdfunding, the way you show yourself or like the story you have is very important to how you're going to raise this money. You want to be able to have, like, in healthcare, you want to be able to say, this is like the problem I'm solving, and this is why this is an important problem, and I think it's an important thing if you want to get backed.
Great, thanks so much. Any other questions?
I have a question for Mike. You had mentioned that the first hour is generally the most important for a crowdfunding campaign. And, you mentioned that you used friends and family, stuff like that, to get those that first hour worth of crowdfunding. Are there other methods that you would use? Because I know if I were to ask, friends and family to try to chip in and help out, I'm not sure if I'd be able to get more than, like 10, maybe 15 people to invest. So do you have any other recommendations or advice related to that?
Yeah, absolutely. And just to reiterate the question is, I mentioned, for any crowdfunding campaign, you want to try to get all your backers to back you within the first hour, if not the first day. So besides friends and family, what other options are there to getting these, supporters, right? That's the question.
Yep, exactly.
Cool. Yeah, so, we have something called Facebook, which is one of the best marketing platforms in human history. In today's world, I think that is probably the first thing I would go to. It's just to, again, creating content, making sure your language and the way you tell your story makes sense, and then just going on Facebook and then, Facebook ads, collecting emails, collecting numbers. And that's what we did. That's exactly what we did. We just did more like grassroots, going to dog parks, going to dog events, partnering with dog companies, and just collecting emails. Because at the end of the day, the more emails you have, the more you can reach. And that's the name of the game, right? And getting people to convert, getting people to, sign up, email, getting people to then have like a call to action, right? Back you, push a button, swipe a credit card, Apple Pay. But yeah, Facebook ads, that's totally how I would do it today. You collect a lot of emails.
Great, thanks so much, Michael. Any other questions? If no more questions, I would like to take the opportunity to thank everyone to participate in this section, and especially our speakers. And we'll post this video online as well. And Gwen and Michael, if you would like to share, please share your PowerPoint with us as well. We'll also share this with our community. Thanks so much, everyone. Have a wonderful weekend.
Thank you, everyone.
Thanks, everyone.